What if you could save on taxes while helping the environment? And not just small deductions, we're talking about saving millions. Imagine having the same strategies that wealthy families and investors are using right now. Today, I'm going to share with you 3 tax strategies, and by the end of this video, you'll understand exactly which path might be right for you. I'm Rich Smith, and I help break down sophisticated tax and wealth strategies. Today, we're joined by a true expert, Murang Pak, whose innovative work in conservation easements has helped preserve thousands of acres across America while saving his clients millions in taxes. Whether you're ready for the high-level family partnership that we'll talk about, or just starting to explore conservation strategies, understanding your options can transform your tax planning for years to come. So the 3 things we're going to talk about today are the family partnerships, because that's been around the longest. And then we'll explore the 3-year hold program. And then there's the fee simple approach also. Each one offers different advantages depending on your situation. So let's dive right in with Murang and talk land conservation easements. Can you share a little bit about the background of this historically? What is a land conservation easement?
Yeah, no, it's good to start from the beginning, right? So, yeah, I mean, decades ago, Congress passed these legislative provisions where if a landowner wanted to conserve their property voluntarily in perpetuity, that you receive tax deductions for that. It's much like if you were to, donate a used car to Goodwill, you get a tax deduction for the value of the car. But in this case, it's still your land, but you're voluntarily placing it under a conservation easement deed so that no one could ever build on it ever again.
Well, let's tackle the family office first, because I think when people hear about this program, when they hear about the tax benefits, they are thinking, okay, I have to physically own this land. And I want to say for the listeners out there that there is an option where perhaps you don't own any land yet. And we'll get to that. If someone's out there listening and they own land in any state, how would this one program work for something like a family office?
I think one of the best ways to kind of explain this program is giving you an example. So this is a real example, and it's a client that we're working with. So he and his family own about 10,000 acres in Colorado. It's a ranch. Some of their property is ideal to build a utility scale solar farm. And we verify that through desktop analysis by solar development firm, an engineering firm. And they have all the data to kind of look at that and say, yeah, this is ideal land to build a utility scale solar farm. So what we're really talking about is valuing your land at highest and best use. And the government allows us, the IRS allows us to value land at the highest and best use if there are no comparables. So how do we value homes? We look at comparables. So, but in these types of situations, it's almost impossible to find comparables of the like size parcel with the like size character. So oftentimes what, landowners do when they buy and sell pieces of parcel, they look at comparables that may not even be in their area, right? So what we do is we look at that to see if there are comps, and if they're not, we're able to utilize the highest and best use valuation for the property. So we really have 3 appraisals in that whole process, so that we make sure that it's conservative. So if we're ever challenged on the appraisal, that we have 3 different appraisals and we use a conservative number. Yeah, and in that example with that client, we're gonna be able to use probably anywhere from 350 to 450 acres of their property, and they're gonna be spending from all the consultation and all the management fees and the engineering firms and legal fees and accounting fees. They're gonna spend about $2.1 million. But in return, looks like they're going to be receiving $45 million deductions that they and their family members can use and apply it to 50% of everybody's adjusted gross income for the next 15 years.
It's such a legacy benefit. It's nothing your family would need to think about doing every single year to keep up with what have you. This is something that, number one, you own some land. Perhaps you just thought of it as open, beautiful nature space. You love that creek down the middle, or you just love, going hunting on it, for example. But even if you've been putting it to use for something like farming, it sounds like there's a program out there that has an expense to it, because you're going to do 3 different appraisals, but you're going to find out what the highest and best use is for that land, and then potentially be able to have that tax deduction, legacy tax deduction for your estate for up to 15 years. I think a lot of people are going to be surprised to learn about something like that.
Yeah, I'm very surprised actually. We even speak to sophisticated family offices and they're aware of, conservation easement, of course, but they're not aware that you can utilize highest and best use valuation. That's where you get the big increase in your multiple of your investment. So, yeah, people that know have been doing this for their families for a long time. Very famous people that we know that take advantage of family partnerships for their family or just themselves, right? So family partnership just means, hey, you can use it alone for you and just your immediate family, or you can extend that benefit to anybody that's related on both sides of the marriage, to include stepchildren, grandparents, what have you. So it's a great, great provision. Sophisticated family offices take advantage of this all the time and realize the incredible tax benefits. There's really nothing like it.
No, it's super exciting. And so anyone out there listening that has not heard of this, has heard of it, but thought, oh, maybe, this isn't something that is for me. It might be time to, at the next family gathering, just bring it up and pick everybody's brain a little bit and say, hey, I was listening to this interview and I heard about this. Maybe this is something collectively we should look into. But I kind of wanted to move the conversation forward to that listener, that person out there who doesn't currently own any land. However, they still have the opportunity to take advantage of something like this. And a little caveat that I mentioned before is, with something like a 15-year schedule for the family office, this second product or incentive, if you will, might be something that might be a little bit faster in terms of time and might be repeatable if you're a high net worth individual, if you have a liquidity event coming along, if you're doing some of that estate planning. So let's move the conversation forward a little bit. Talk to us a little bit about the program that is available to people who currently don't own some land but are interested in this conservation easement.
So if you don't own your own land that qualifies, whether it doesn't meet conservation purpose, or we can't use it at the highest and best use, like your land just does not work for utility scale solar farm, or you don't have any really aggregates underneath your land that we can value. It's not a great piece of property for mixed use because it's, just doesn't work. It's not in the right area of the city. So in that case, what we do is we actually find land for you. So we'll go out and we source land that meets those requirements. We'll figure out from you, hey, how much deductions do you need? And then we'll go out and source that right piece of property. Now, you may be in Utah, but we found the property in Texas. So it may not be close to where you reside, but we'll find you that property that meets conservation purpose, and this is what we do all the time, and that we can value it at the highest and best use. And it's your land. So when we complete the project and hand deliver it to you, wrapped in a bow tie, you actually inherit that property. So you get the property. We don't mark up the property. It's just a sale between two property owners, and the cost of the project is the same. So we don't make any more money. It's just that now we're out finding that property for you that will work, and we pass that property on to you. So we can go source that land for you if you do not currently have one.
Is there an opportunity for maybe even somebody like myself to say, I don't own some land, and I'm not necessarily looking for you to find me my own piece, but can I still invest in this and maybe look to do it contrary to what I mentioned before? I want to do this every year, give you 100,000, 500,000 per year, just to essentially have a tax benefit. And if so, how does that work?
So we'll go into the second program that is exempt from the listed transaction rule and no reporting requirements to the IRS. So same as the family partnership. And that is, it's brand new. So when Congress changed the laws on syndicated conservation easement programs in December of 22, they added another exemption to the reporting requirements. And that's if all the partners that own the land held that land for at least 3 years. So you have to hold the land for at least 3 years. And it's still the same program. You can apply it to 50% of your AGI, and it's a 15-year carry forward. So what we're doing is we put together a program where we're saying, hey, investor, we have to hold this property for at least 3 years for you to take advantage of the tax deduction benefits. But from year 1 to 3, we're going to invest it into a credit fund with a very reputable company, and the returns on your investment will be 7%. So from year 1 to 3, it's a hybrid program where you're going to get returns on your investment of 7% annualized. And then at the end of year 3, you're going to get that big tax deduction that you can apply for 50% of your AGI and 15-year carry forward. So it's a hybrid program where you're investing and then you're getting that deduction at the end of year 3. And so if you did that every year, then it's a better program than the fee simple offerings that we also offer that you can take advantage of the year that you invest. And so that's a 3-year program, and it's the attractive part of that is that you get a return on your investment. It's not you're just not parking your money and waiting for the 3 year. You're getting a 7% return on your initial investment, and then at the end of year 3, again, you're going to get that deduction in the tax deductions, just like the syndicated conservation easement programs. But this is not on the listed transaction list. It's a brand new exemption, and it's a beautiful thing. So with the 3-year program, because it's syndicated and we have multiple partners coming into the offering, we actually have to hold a vote. So with all the investors, and the vote is, hey, given the returns of, let's say, this solar farm project, and we're projecting out the returns for it with ROI and IRR, do you want to engage in actually really building this project for the long-term returns, or given the value of the project, do you want to use the value to offset your tax burden?
Everyone's always going to ask about, like, is this right for me? And then we'll get into maybe some of the risks and some of the potential. But what does an ideal client look like?
So the 3-year program, you're kind of planning ahead, right? So you're realizing return on your investment from year 1 to 3. And then you're waiting for that big tax deduction at the end of year 3. So if you can kind of plan ahead and hey, what I'm making today, I'm going to make the same in year 3 or even more, in 3 years. So you're investing into what you think you're going to make and the tax deductions that you're going to need at the end of year 3. Others, we're talking to business owners that they know they're already working with, M&A firms saying, hey, I want to sell my business and here's my timeline. So, if you start early, and that's what these M&A firms want you to do, is start engaging with them early on in the process. And they say their ideal time frame is 3 years before you want to sell. So if you can plan that, and you're going to have a big event in 3 years, then if you come into this program, let's say the offering that we're pushing out this year is, if you invested $100,000 into this, you're going to get a return of 7% on the 100,000 from year 1 to 3, and then you're going to realize about a 500,000 tax deduction at the end of year 3. So really, instead of paying, let's say, I don't know, if you live in California, New York, or New Jersey, some of these high state tax states, you're paying about 50%, right? So instead of paying 50%, you're paying 20, because you're giving us, $100,000, and you don't have to pay taxes on $500,000 at the end of year 3. So that scenario, it's somebody that's making $1 million. You wanna really help to mitigate half of your AGI, which is 500,000. So all you have to come in with as an investment is 100,000. And so what that enables you to mitigate $500,000 of your income at the end of year 3.
So, what are the risks, or what are we not asking in terms of whether or not this is right for me or the ideal client?
I guess the risk is, it's always with the IRS, right? But the great thing about these two programs is they are exceptions to the listed transaction rule, and any reporting requirements, unlike the previous syndicated conservation easement programs that the IRS really went after. So, there's no additional scrutiny by the IRS, and no additional reporting requirements. So really, the risk of you getting audited as an individual is like, even if you didn't participate in a program like this, right? Because they're going to look at your individual tax returns. So, and the statute of limitations on audit of the partnerships, like the 3-year hold program, is 3 years. So it doesn't go on forever and ever. If they don't audit the partnership within 3 years, then we're free and clear, and there's no coming back, 5 years later to audit the partnership.
Well, I know we just spoke about the syndicate, excuse me, the syndicated conservation easement, and we talked about options for a family office. But I know that from doing my research on you, there's another program, and I believe it's referred to, and correct me if I'm wrong, it's a fee simple program. Could we talk a little bit about that, and if that might be something people are interested in as well?
The great thing about the fee simple programs, and we offer that within our firm, is that you can take advantage of the tax deductions the year that you come into the investment. So fee simple, it really is just, fee simple donation deductions, right? So again, we're able to realize a great, return to the investors in the form of deductions, because we're able to use the highest and best use valuation of that property that we're donating to a qualified nonprofit entity. The difference between the syndicated conservation easement programs that are no longer viable and the fee simple program is that in the fee simple donations, you can apply 30% of your adjusted gross income to fee simple donation. And the carry forward is 5 years. And so those are the limitations of fee simple donation programs. But what we do is we do the same in sourcing land that we use for highest and best use. So either utility scale solar farms or aggregate mining projects. And of course, same thing as before we mentioned, we bring all the experts in to do all that work, whether it's solar engineering development firm or mining experts. And with fee simple, like you said, you can come into a fee simple offering this year and you'll get the tax deductions for this year, because we just have to donate the land by the end of the year.
If someone's out there and they feel like, oh, I'm just learning about this, I want to take advantage of it today for this year, maybe they're having that windfall, that liquidity event, they feel like they're behind the eight ball, then it might be worth looking into a little bit more the one we just spoke about, that fee simple plan. And for anybody out there, it's important, now that you have your education, do your due diligence, right? Work with professionals. You mentioned at the top of the interview, if you're going to get any of this set up, you're working with engineers, other potential law firms, multiple appraisals. This is not going to be something that somebody just tells you, hey, it's just going to work out. Trust me. You need to ask all the right questions and know that there are professionals involved, and they play an important role.
Yeah, no, that's a great point. Due diligence and mitigating risk really is the most important aspect of these kinds of offerings. It's the only way that you're protecting the investors. You got to do it right. You got to use reputable vendors, and making sure that, if you're audited, that it stands up to the audit.
Wow, what Murang just shared gives you a complete picture of conservation easements available right now. From the family partnership to the 3-year hold program and even that fee simple approach. Each one serves a different need and investment level. And like we discussed, there's been increased IRS scrutiny in this space. But when these are done properly with qualified experts, these strategies remain firmly supported by the IRS, by the tax code, and those recent court rulings too. So if you're wondering which conservation strategy might be right for your situation, I'll leave a link down below in the description to help get you on the right path. I'm Rich Smith, and I help you understand tax strategies that create real value. I've got something very exciting to share with you next week, so make sure you hit that subscribe button.